May pips be upon you. Hey, I got a quick bit of analysis for NASDAQ because I think there's a good trade cooking. And I got to share what I got cooking. All right, let's see what we got here. Let's go to the monthly. All right, first thing we notice, we got an ICI pattern. All right, ICI, when you have an ICI, you want to see, I say ICI like you already know, impulse, correction, and impulse. Whenever you see the impulse, like so, and you see the correction, like so, you expect another impulse to complete the cycle and to exceed the high of the correction. You want it to pass that, and that's what you can expect. All right, and we see that here. Now, the deal is we want to try and determine how far this thing might go. All right, we want to make sure we can understand because this is our opportunity right here. All right, and here. All right, we want to measure to see how far this may come back and how far this may extend. All right, the way to do that is using your Fibonacci retracement tool. You go from the low to the high of the impulse. All right, and you want to measure at least to the 382 Fibonacci level. All right, that'll mean a full retracement. Didn't happen here, okay? But so we can move on. We can assume that it's going to be just like these little pullbacks. All right, just a pit stop on the way up. All right. So, it's hard to determine where this one might end up. All right, it could end up right here. This could be the limit. All right, what we want to look for is in the impulse is signs of exhaustion. All right, and we can see that clearly, more clear on the lower time frames. All right, we're on the weekly now, and we start to see some things. All right, what becomes clear is the W pattern here. 1, 2, 3, 4. This is an extended W. All right, when we have an extended W pattern, we want to see that last leg come back, a pullback, at least to the 38 Fibonacci level. We're going to take our Fibonacci tool and we're going to measure from here to here. We want to make sure we get at least at least a full retracement to that Fibonacci level, and then we could set up a short. We can set up a short and catch all these pips. All right. Now back to our W over here. So we have this W form. So what can we expect now? Like I said, we're going to measure to see if we can determine how far it'll come back. But we also want to remember, doggone it, we also want to remember on a regular W pattern, we want to see the extension and then the retest of the neckline. This is almost automatic. You'll see this pattern over and over again, and you'll see it continue after it tests that neckline. It should exceed the point of the pullback and continue up. All right. This alone here is another ICI. Keep it in mind. All right, because we're going to see that. So now that we see that, let's go to the daily. All right. And we could see what's cooking here. Okay. We see that we got this W here. All right. And price had continued up, came back. Where's this line? Oh, we're testing the neckline right here. All right. And it continued up. All right. And look what we got here. Another W pattern. And guess what? It came back and tested. Shall we take a closer look at that? Because y'all think I'm joking about these doggone W patterns. No, I'm not joking about them at all. You can see clearly that it's a W with the arm. All right. And if we put our Fibonacci's on it, our notches, all right, you can see that it came back, it made a full retracement to the 50% level. We want to make sure that retracement is at least 38. All right. And we could take shorts from here down here and catch a doggone, how many pips are we going to do? 252. Come on, man. That tastes good to me. That's good eatings. All right. Down, matter of fact, I didn't even measure the whole thing. That came down to the neckline to the 50. Yeah, 325 points. Come on, man. We can eat that up. All right. So we have this pattern. All right. Where is price going to go? Well, when we have that touch, when it comes back to retest that, all right, if it doesn't go through, we can expect it to continue past this TP. If it doesn't, sometimes it makes a double top. Sometimes it goes right through, like I said, but most of the time you can see it test the neckline and continue up. Let's go to the a lower time frame. Doggone it. All right. This is our best entry for swing trades, the 4-hour time frame. All right. Now, here, matter of fact, let me back up a second. I want to mark off some key levels here on the daily so that we can see things a little more clearly when we get to the other time frames. All right. What do we got here? We got something here. I like this one. I like that neckline. I like that neckline there. All right. And what do we have here? We have the ICI. It came back. Did that. Okay. All right. We got another little doohickey there. Did I say doohickey out loud? All right. And we got this one. This is a good one here. See, what I'm looking for are key levels, the ones that are tested for both resistance and support. Okay? Resistance and support. I'm looking for those kind of levels. All right, I need it to be retested. Here it's the retest of this area. I'm gonna watch this one. This one give me the heebie-jeebies. All right, and let's go to the 4-hour now. All right, and we make our adjustments here. Okay. All right, there we go. Look at this. This is where I was trying to get to, right there. See? Hold on, I'll mark them out. And we got this one here. Used for both resistance, support. This gets kind of murky here. This one gets kind of murky here. And I'm wondering if I'm makes me wonder if I'm too high. I'm going to keep that one in mind. We got one right here. All right. And what I do is I'll check my lines with the line tool. All right. I want to make sure I get those close. What the line tool does is measure just the close. Okay. You can see where all prices close, and that way we can get the best support and resistance lines. All right. Let me see about this one here. There you go. I like this one. I like it here. I like it there. I like it there. Yes. Okay. And we got something going on up here as well. All right. Let me take a look at that. All right. Yeah. Right here. This is valid. This is valid stuff. Okay. That's valid stuff. Why is that valid? Why is that valid? Somebody give me the answer. Because it's a W. It's them doggone W's. That's the most retarded W in the world. I'm sorry. Excuse me for that. This is your W. Down, up, down, up. And this is a regular W. It came back to test that neckline. That's what I'm talking about. It happens every time. You can bet money on it. All right. And that's what we do. We trade him, but we're betting. Let's take this. Let me see something here. Now, notice the closes. Notice the closes here, here. That's a great level. Oh man, what did I just do? Okay, I don't know what I just did. Look at this. Look at this right here. Yeah, you can't sneak me. You can't sneak me, man. That's a good level. That's a good level. That's good eatings. All right. All right. See how it meets. Okay. Yeah, we did come back and test this doggone neckline. That's a good level. Also, I want to bear this in mind. Okay. Okay. Now, what are we going to do? We ain't finished yet, man. Let me go down to the hour. All right. Now I'm setting up for an intraday trade. That's what I'm trying to do. All right. Let me bring this into focus. Focus like hocus. All right. Look at this. When I draw a trend line, all right, some people are going to put it just on the wicks. All right. That, for me, that's incorrect. You draw it to where you include as many wicks as possible, because you know price is respecting this area, this zone of support. Okay. That's the way I do it. That's the way it works, doggone it. All right. Now, what do we have here? All right. I see prices rejected and respected. Rejected and respected. See, I say that tough, right? Its price has rejected and respected this doggone horizontal, vertical. It's diagonal support line, right? But watch the magic. This is how you can get good boundaries. Bam! I'm saying bam. All right. Now we got a doggone bear flag. Look at that. Look at that. It's pretty too. All right. But what I'm noticing here is the double top. All right. Now, what's the deal with double tops? The deal is with double tops, if it's in an uptrend, you do not take those as for shorts. All right. Not automatically. In a double top, you do not take in a double top. In an uptrend, you don't take double tops, because it could respect here and fling all the way up. All right. But you do take double tops in a downtrend. You take double tops in a downtrend. If it's a bigger downtrend, then that's different. But that's not the case here. You know, we're really in a the structure is bullish. So that's the deal on that. Now, what we want to watch. What is our area of concern? Our area of concern is, can I just please, man, just be available to me? Thank you. All right. The area of concern is right here. If I can just get it done. Why? Because if we get price, price has come down here, has had an impulse up and it's impulse down. We're in this range. All right. But what I need is a break of structure, this structure. And that break would come in this area. Okay. So I'm looking for a close right around here. All right. I need a close of a bearish candle right around there. That will signal to me that the structure is broken and that things are heading downtown. Now we get a close below. Let me show you. Let me get that. Let me get that. Let me get that good line on here. Now we get a close. Ooh, this is funky. Yeah, we're basically in the same zone over here. We're basically in the same zone. Can you see this? Where's the line at? Come on, man. Get your stuff together, brother. All right. Yeah, we are in the same zone here. All right. We get a close below this zone. Right about there. We're going downtown. All right. What'll probably happen is it'll look something like this. It might come up and retest this, but if it goes down, if the impulse is deep enough, it'll come down here and test here, test the support that was support as resistance and come on down. All right. I don't know how far it's going to come down, but I'm going to show you something, how you can find out how far it's going to come down. If we can make it past this line here, excuse me. Oh, if we can make it, what the heck is this? If we can make it past this line, somebody calling me. Yeah, if we can make it past here, and it does something like this here, and then comes back, does this thing. All right, and that's a big ask because over here is is traffic. You know, all this represents traffic. You know, so price has to eat through this. All right, and once it does, if we can get below this line, there's a lot of clear traffic looking at that candle. Okay, sorry. So you look at it as traffic, as speed bumps. This here is a lot of, if I can just get one, okay. This here represents smooth traffic, no speed bumps, all right. We got to get past this area. This is a area of rejection, all right. And when price does break through, it has to get past this area so we can expect some kind of pullback or reaction to it because it's lined up with this over here. Okay, and this as well. So we can expect something to happen over here like it already did. But because it has already tested this area, once it comes back down again, it'll be a little weaker. So the reaction will be a little weaker. So I'm thinking we'll get through. So for the first trade, we're going to watch out for right about here. Sorry. Which one is it? All right. For the first trade, it's going to look something like this. We're going to keep that above. All right. Maybe we can get. I always look for a 2-to-1 risk reward ratio. We got 86 points that we can target. All right. But the overall trade really is to here. This is what I want to target. This area, this key level. And I'm fairly certain that that's where we're going. All right. Give yourself some room. All right, give yourself some room. Right now, understand something. Right now, this area is, this trade, this environment is still bullish. All right, we have to wait for this area, for this environment to turn from a bullish one to a bearish one. All right, this is straight bullish. All right, once we start breaking some lows. Once we start breaking some lows, then we're breaking the trend, and that will turn the environment to a bearish one. And what we want to see is a break here. Now, there's two ways you can enter this. You can take the momentum trade, where it breaks, the candle's broken there, the candle penetrates, breaches this this channel, and you can take it from here. It'll probably retrace, but you have your stop loss above the top of that candle. All right, so you can make sure that you have some protection. All right, and then it's gonna then it'll drop. It'll do a little dance here. It might jump back up. All right, so don't go into break even too fast. All right, some people go break even from when it gets to 1-to-1 ratio, and I don't recommend that in this particular situation, not unless you want to take profits here. All right, wait for a pullback. Let me teach you. Let me teach you. You wait for a pullback. Candle penetrates. All right, you take the next candle here. All right. All right, make sure you take it with momentum, because this is a momentum candle. Make sure you take it with momentum. All right, this candle may pop up and then come back down. All right, or it might just keep going down. But once it gets down here around this area, it'll pull back, and that's where people get caught at their break even. Don't take that. All right, stay off. Let it bounce. Let it do its thing. It might even jump up in here, but then it'll go. And once it breaks the pullback point, that's when you go to break even, because now you have protection. So if it turns on you, it's got to come through here first. Do you understand? Does that make sense? It should make sense. All right. You're smart people. How do I know that? Because you're on my channel. All right. And we're going to let this thing roll. All right. But we got to watch this area. This is our area of concern. We're waiting for that candle to break, and we'll take the next one smoking. Got it? Good. Let's eat.